Yesterday, the G7 finance chiefs pledged to use all appropriate policy tools to address the economic fallout from the coronavirus outbreak. A little bit later, the Fed Reserve announced a surprise move to enact an emergency interest rate cut by 50 basis points. The last time the FOMC made an interest rate cut at an emergency meeting was during the global financial crisis of 2008. Back then, the interest rate was also cut by 50 basis points and the markets experienced a sharp downfall. This time, the situation almost repeated itself, only in inverse order. At first, major US indexes declined at the same pace as in 2008. However, they had resumed an upward movement shortly after. Now they are mostly up. After the Fed's unexpected key rate reduction, the Dow Jones index continued to consolidate in the range between 25,800 and 27,000. The US stock market also regained footing after Joe Biden had won the South Carolina primary. As it turns out, market participants seem to favor Biden. Donald Trump did not stand outside and contributed to the improvement of market sentiment. He also said that he was pleased with the Fed's decision to cut the key rate, but hinted that he expected more aggressive policy easing. The US dollar incurred small losses against such a background. The USDX index reached 97.00 but failed to break below that level. Now it's consolidating a little higher at the level of 97.20. Meanwhile, the outbreak of coronavirus around the world is becoming a more pressing issue. Interestingly, in China, the spread of the virus seems to ease. The number of cases in China has been generally declining. The Chinese authorities urged the citizens living outside of mainland China to refrain from traveling home for a while. Fearing a new hit of the epidemic, risk appetite remains subdued. The dollar-yen pair failed to break above the resistance level at 108.50 and continued its downward trend. The chart touched the level of 107, so an upward correction to the level of 107.90 is likely to take place. At the same time, the Australian currency remains attractive to traders. Investors welcomed fresh Australia GDP data that surpassed their forecast value. However, the report reflected the state of the economy in the fourth quarter. As for the first quarter, experts are predicting a drop. Still, they stress that the recent interest rate cut may support the economy in the long run. The Aussie is held near the level of 0.66 with a potential decline to 0.6620. Today, the Bank of Canada will hold a meeting. It's expected to join the Fed Reserve and Reserve Bank of Australia in cutting interest rates to cushion the coronavirus impact. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.